Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mumme. And the goal of the show is very simple. It's to learn from those who have mastered their craft at what they do. If you're new to my show, please be sure to hit that subscribe button. So today we have a new guest to the show, and his name is Matt Tompkins. He is the founder and CEO of Elevate Financial Group. So without further ado, Matt, welcome to the show.
Thanks, Ben. Looking forward to it.
Same here. So Matt, let's kind of get started here. Tell us about your origin story. What inspired you to make the shift, from being a traditional CPA and then transitioning into an entrepreneur and starting your business?
Yeah, great question. I mean, my path started on very much like the quote unquote default path, I'd say. So, graduate high school, straight to university, straight out of university into commercial banking. After a couple of years there, I was like, need to get my CPA or just want some further education. Was kind of going back and forth between law school, MBA, CPA, kind of landed on the CPA route. Then went and cut my teeth for a handful of years at PwC, one of the largest accounting firms, I think, globally at this point. And, I was kind of in the mindset of work for 40 years, get the pension, get the retirement plan. It's what I saw my parents do. It worked for them. But after about 3.5 years in that role, I couldn't do it. It was one of those things. I couldn't picture myself in a cubicle or going into an office and the same office for multiple decades. And, the big catalyst for me, kind of that transition from traditional CPA into entrepreneur really happened during COVID. And I think it was the first time for a lot of people, I'm sure you've heard this before, they finally had time to think and to kind of take a step back. And that's what happened for me. It was the first time where I wasn't traveling for work, used to travel 3 or 4 months out of the year. And had time to just kind of like recalibrate and think, okay, do I want to do this? And if it's not this, what do I want to do? And at that point, I was looking at jobs in industry. So I was in public practice. Going into industry would be working at companies like Lululemon, a lot of people went to, Aritzia, so on and so forth. But again, could not really picture myself being there and doing that style of work. So got kind of lucky. I think that's a big thing that people discount is luck in all this, and had a mutual acquaintance reach out, and they're looking for a fractional controller or fractional VP finance to come in for their business. They're doing, $5-6 million in revenue, profitable, just need to kind of go to that next level. So took on that role. And then from there, it kind of compounded and got a second referral from them, got a third. And then all of a sudden, 6 months down the road from August 2020 to January 2021, was working with 5 or 6 clients, and did a lot of that for the first 2 years of like kind of working my ass off, just trying to make as much money as possible. Only working with a contractor to kind of off the side of my desk for support here and there. And then 1.5 years ago, I kind of decided, you know what, I think we have a solid base. I think we have a brand a little bit now, and we can really build this. In the last 1.5 years, we've grown our team to 12. We work with, I think 40 or 50 clients or so, and have really kind of taken that next step. So it's been a wild ride. Sometimes it feels like it's been 10 years. Other times it feels like it's been a few months since I kind of made that transition. But overall, couldn't be happier with the overall decision to make that leap.
Well, Matt, I want to applaud you, on taking that transition and taking that opportunity, to create a different lifestyle for yourself. And, great success, but it's not always easy in entrepreneurship, right? We have the highs, and then we have lows, and then, contract by contract with all your clients. So a question I have for you is, what are the common misconceptions about entrepreneurship success that you would like to debunk?
People think it's sexy, and it's not. I think that's the biggest thing. If you go, social media, Twitter, Instagram, it's such a vortex, right? You see kind of people high flying, having all this time, all they do is travel, but it's just not the case. It's such a challenging path forward. And I think sometimes people always say, if you want financial freedom, if you want independence, go become an entrepreneur. I would say that's true for 1 to 2% of the population. I think the majority of people are actually better off at a large corporation, having the time, not taking as much risk, because it's such a challenge, and it's a daily grind where you have to be willing to sit in the mud for a long time until you kind of have that escape velocity. But the reality is there's a lot of boring work. I think people can get hung up on the closing deals, winning these big contracts, hiring some great talent. All that does happen, but the reality is a lot of the day to day is, if you look at my day to day, you'd be like, what is this guy up to? I'm like responding to, you know, 50 plus emails a day, kind of processing a lot of information, putting out a fire. And it doesn't look that glorious if you actually sat beside me for a day. From the outside looking in, it looks pretty cool. But from on the inside, I think that's probably the biggest misconception, is that it is just a challenging job at the end of the day. And you need to be willing to kind of sit in that for an extended period of time to reap the rewards.
Totally. And that doesn't always feel good too, right? Where you're like, oh, I'm trying to create a lifestyle that's going to create less work and, pay me better or more fulfillment in my day to day. And now sometimes you're like, oh my God, this is the complete opposite. Right. So
That's
how do
totally true. And I think a big one too is like, I forget the quote. I think it's from Michael Gerber's book, but something along the lines of, um, you know, your boss is an absolute lunatic, but you are your own boss. And that's how I feel a lot of the time, is like I'm working for a crazy person, but I'm working for myself. And so it's kind of, you know, managing that as well, and like giving myself the space and time to take a weekend off, take a week off, and giving myself that space, because it's hard to get in that loop of, not giving yourself any time off. Whereas at a company or at a normal kind of T4 job, you do have that vacation. You do have those stat holidays that your hand is forced to take. Whereas in this role, you can work as much as or as little as you want. But I think a lot of entrepreneurs tend to work ex- extreme hours in the early stages.
So how have you managed, that overwhelming demand of, skill in your business or feeling that pressure that you have to perform or put in more hours and then realize, okay, I also need to take care of myself. So how do you set those boundaries?
Yeah, I mean, I didn't for the first little bit, to be totally honest. So, you know, rewind August 2023, I guess. So just this past summer, we'd been pushing really hard for like 12 months. We onboarded probably 25 clients in that period of time, so multiple per month, which is a big task when you're onboarding someone for bookkeeping, fractional CFO services, all these advisory services. And got to a point where I was like, I'm totally done. Like all I wanted to do was really burn my laptop, to be honest. And I remember my fiance asking at the time, she's like, what would you do if someone wanted to buy it? And at the time, accounting firm multiples aren't that high. They're probably $1 to $2 million or something. And I was thinking, I probably wouldn't sell it, because that's what all it would mean is I'd have to work for another 12 months in kind of that transition phase. So I was just totally, nothing excited me. No money excited me. I could not really, get surf session, get great dinner with my fiance. Nothing really got me feeling excited anymore. And that was a big wake up call. So took a week off there. And since that point in time, it's been trying to incorporate more play into my life. Big sports fan, grew up playing baseball and hockey all the way through university. It's like getting back doing that kind of stuff. And it sounds so simple, right? But I didn't play baseball for 7 years. I didn't play hockey for that extended period of time either. So getting back in the routine of like, nope, Wednesday nights I do this, Thursday nights I do this, giving myself a bit of a break from work and stepping back from it is a big one. And then I'd say number two is like, and I know probably so many people have said this, but it's sleep. Like I'd always be like, oh, I'll just wake up a little bit earlier to finish some work. I'll just, go to bed a little bit later to finish some work. But at the end of the day, the work never ends. Is something I realized is there's always going to be stuff to do. I'll never be fully on top of it. There's always going to be emails, always going to get emails overnight. So to think I'll ever actually have a grasp on it is probably not true. And so it's just kind of handling that emotion more than like trying to get to inbox zero every single night at like 6 p.m. It's like, no, that can happen tomorrow, or that can happen next week. And that's totally fine too, because the reality is it's never going to be fully on top of everything. And if I am on top of everything, it might last for a few hours. And then the inbox fills up, demands fill up, and kind of back to where I started. So
What are the risks of over optimizing in finance, and how can we reduce them to withstand, market downturns?
yeah, so I actually have a personal story about this. So, during COVID, we saw the markets just kind of take off. Originally, I mean, they dropped, whatever, I forget, 25, 30%. And then interest rates dropped to basically zero, and we just saw them absolutely tear. And it was the first time where I was making like quote unquote real money, I say, where I could like pull a bunch out and invest it each month. And I started really doing that to a point where every dollar was being invested. I was, using margin in my brokerage accounts, taking on debt basically to invest more. So it's like, this is stupid. I can borrow at 3%, can earn 10%, or so I thought, and started even trading options. I'm not a finance guy, I'm accounting, so I had no business trading options at all. But in that first 6 months, I was making money, and I was like, this is pretty cool. Had a little bit of crypto that's taking off, but then everything tanked, and it wasn't even that bad of a pullback, right? Like in hindsight, I think the S&P's at another all-time high, but during that period of time, I think it pulled back 18, 20%. And all of a sudden I was like, oh, right, you can get margin called. Oh, right, these investments, like I can lose a lot more when I'm taking on debt. And I didn't have any room for error. I didn't have cash reserves. I just kind of had everything invested and then my checking account. And that was scary. That was the first time where I was like, whoa, like things can happen quickly. Um, and so now operate completely different. And maybe we can touch on that. But it's the same for business, I think, where businesses try and be so efficient. Pre-COVID, we saw just-in-time inventory. And then when supply chains get messed up, all of a sudden, no car manufacturers have any cars to sell because they were too efficient and almost over-optimized on that just-in-time inventory. And the same can be said for businesses, right? It's like they have all their capital deployed or they're pulling it all out in dividends. But what they should have is some room for error there. And I think a great example of this is Bill Gates in the 80s, 90s when Microsoft was starting to take off. Probably the most ambitious person in the world. I think his goal was to have a home computer in every home in the world by, I forget, I think it was by like the year 2000. So like long-term ambitious, like that crazy goal. But he also had 12 months of salary in the checking account. So if he didn't make a sale for 12 months, he could pay everyone for 12 months. So balancing that ambition with that conservatism is something that I think about all the time now and try and implement personally with my own investments, but also the business side of things as well.
How can we adjust our investment and budgeting strategies to incorporate margin of safety and securing long-term financial stability when there's, uncertain times?
Yeah, so kind of what I was speaking to just a second ago there. Now I'm probably holding more cash than any investment advisor would say is reasonable for my age. 32 years old, I don't know the exact asset allocation you'd want, but probably not as much cash as I have on hand. But I can sleep so well at night because I have that room for error. If something happens family related, or if something happens business related, where all of a sudden things dry up, or I need, to make a large payment, I don't need to ruin that compounding, and I can still let my investments kind of grow for decades to come. But I have that cash reserve to be able to fulfill those short-term needs. And I think that's, how I run the business as well. It's like, I don't need to be super efficient on capital, like deploying capital. Or I don't need to be pulling all the money out in dividends. I can just let it sit there. It can maybe have no purpose, or it's not efficient, or I'm not deploying it, down to the cent, but it just provides peace of mind. and having that room for error, because the reality is no one knows what's going to happen. I think that's something that I've just come to realize is uncertainty is everywhere. And we'll hear people, market's going to pull back X%. Gold's going to do X, Bitcoin's going to do Y. But the reality is no one truly knows. So it's having that flexibility, and that, I guess, peace of mind is the number one, that knowing whatever happens, I can withstand it. I don't have to, retract from my plan. I can just let my investments ride, because the investments I do have, I don't want to touch them for 20, 30, 40 years. And the only way you can do that is if you don't need to ruin the nature of compounding and pulling them out.
By you doing that, by having cash and being in a position where you can make a move, right? You can take care of opportunity. What's your thoughts on positioning and taking advantage of circumstances?
Yeah, I think it's so important, because what I realized when I was totally optimized in one direction of fully invested, if I saw a good opportunity, I actually couldn't make a move on it, because I'd be selling these investments at a loss, which is painful, and wouldn't have the cash reserves on hand to pounce on opportunity. So after that kind of debacle of the volatility that I had in the investment arena, read quite a bit of Warren Buffett and realized, how much, well, he has ridiculous cash on hand, but his just patience and his willingness to kind of sit on his hands and then pounce on an opportunity. And they'd sit there for 5, 6, 7 years at a time and not really make any moves. And then when the opportunity came, they pounce on it. And I think it's just taking a bit of that strategy. Obviously not sitting on, I think they're sitting on $140 billion of cash at Q4 of Berkshire Hathaway right now. But you can take it to a lesser extent where, you can sit on whatever's comfortable, say 20, 30% of your portfolio on cash. And then if that opportunity does come and you see a great one, you have the opportunity to pounce on it. But if everything's over optimized and everything's kind of down to the penny invested, that opportunity will never be there. And then you'll miss out on some great opportunities in the market, because again, we see them kind of all the time. They'll pop up, there'll be a huge pullback and a great entry point, and we won't be able to do it. And it's the same on the business side. See a great opportunity in the market, maybe a great client that you can, fulfill their services for. But if you don't have that flexibility and that liquidity in the business, it makes it really challenging to go get new clients, because maybe you need to hire some more people, which costs money. And if you're fully invested into everything, you'll never have that opportunity to do so.
So I want to shift gears here, in terms of, yeah, you've really helped a lot of businesses. So what are typical, financial hurdles you've noticed amongst small and medium-sized, businesses, and how does Elevate Financial Group tackle them?
Great question. I'd say number one is a lot of businesses try and do, and they focus on too many things. So a lot of the clients that we've worked with, when we begin working with them, they'll have, one had 25 KPIs, key performance indicators. And for a company doing $4 or $5 million in revenue, profitable, that's way too many directions to go in. That's too many directions for a large mega cap, Microsoft, Apple as well. So we try and distill that down to the main drivers and get them really kind of focused on like one major thing. What's one thing you want to do this quarter? And focusing just on that, because if they're focusing on, let alone 25, if they're focused on even 5 or 6, what happens is their energy is getting diverted across numerous different domains, and nothing actually gets done and nothing actually improves. And so what we've been working with our clients on a lot is just having one guiding principle throughout a quarter or throughout an entire year we've done in the past. And we found that's the number one driver into, either growing their business, making it more profitable, more efficient. And then we're tracking that on a weekly, monthly basis and making sure we're getting closer and closer to that goal. And there's times where, there's numerous different kind of items feeding into that goal, but it's all kind of on that one guiding principle. So the energy isn't being diverted across numerous different domains.
And so could you highlight, a success story, of a client who transformed from, a struggling business level and then eventually, going to a successful level?
Yeah, one in particular stands out, kind of going back to that one guiding principle. So we had a client, I mean, they're a great company. At the time, they were doing, I think, $4.5 million in revenue, but they were focusing on numerous different things. How do we get our ads working better? How do we grow our Instagram follower account? Let's start on TikTok. Let's start on Twitter. Let's go on LinkedIn. Let's expand. And all of a sudden, they had, all these different priorities. They hired a bunch and positions maybe that they didn't need at the time, but they had this kind of vision of like tackling 100 things at once. And then we kind of took a step back and we're like, okay, what's the main driver here? And it's closing percentage. So one person walks into the store, do you close them? And that's all. They had no problem getting people in the door. It was just closing percentage on those people coming in, how many people are buying a product. And we got focusing on that. And what we did was just focus on very small tweaks and very small, I guess, improvements. So closing percentage is 32%. We're like, let's get it to 36%. And that 4%, you'd think, who cares? Well, that 4% added $1 million in revenue. And then the next year, it's like, okay, let's get it to 40%. And we just kept focusing there. And we have for the last 2.5 years. And they're on track for their best year ever, probably might approach $10 million in revenue this year, which is fantastic, extremely profitable. And it was kind of going back to that one key focus area, because if we think of closing percentage, it's like, well, you need really good salespeople. You need a good internal system to make sure you're managing those orders. You need really good stock and inventory so people actually want to buy it. So all those things are feeding into it, but it's just kind of one area to focus on. And, they did a bit of a reorg. They lightened up their staff load and they find themselves in a very strong position now.
I know that example also clarifies, having a smarter like systems thinking approach, right? Making all those micro
Yeah.
improvements or kind of changes to get them to where they're going. So my next question that I have is, how does the philosophy of, calm compounding capital influence decision making with your business?
So yeah, compounding capital is something that I was thinking about kind of at the turn of the new year, and what I want Elevate Financial to look like come December 31st, 2024, basically. And it's three kind of areas that I've struggled with in the past that I wanted to improve upon. So calm is just a reminder that I can choose how I respond. I think it's super easy as a business owner, entrepreneur, is you get an email in and you're reactive. You're just like, oh, like something will piss you off. You react right away to it. Employee will message you and you're like, you should know that answer. And again, you fire something back. So calm is just like, no, I get to choose how I respond. And I get to, take a step back, think about it thoughtfully, and then proceed forward. And I think that works for both angles in the sense of the negative part that I kind of spoke about. And then also the positive part is like celebrating those wins, making sure that I'm enjoying that process of it. And in the process, obviously not getting too high or too low, but making sure that it's an enjoyable experience as we progress. And then for compounding, it's just small things compound. And I think it's, again, super easy to forget that kind of what I spoke about before with that client that just increased their closing percentage by a few percentage points. Will compound it over 5, 6, 7 years. That's going to be a massive difference. And we've already seen that in the first 2.5, 3 years that they've been focusing on that. So I've been thinking about it in terms of my business as well, in the sense of before I was like, okay, how can we double? But if we double, do systems break down? Where do we get the talent? Do we want to service that many clients? Will we onboard clients that maybe don't fit our mold? So as opposed to thinking in that light, it's like, well, how can we maybe grow at 25%, which is still, a great growth rate, but do it for an extended period of time. So come year 5, 6, or 7, I won't be burnt out. I'll still be able to do it. And we'll be probably in the exact same position as if we went for that, doubling every single year. So it's just making sure that we're continually thinking about those small changes, small tweaks, and how much they can compound. And knowing that, it can go in the opposite direction as well. I think that's something that people forget is like, I think the easiest example is like exercise, right? If you just take 20, 30 minutes a day, just again, it'll slowly compound. But if you're not, it can slowly deteriorate at a rapid rate as well. So just making sure that we're kind of balancing that in business and investing. And then the last piece, capital. So it's just combining those two, compounding and then turning it into capital. So the return should be both significant and enjoyable. And that's a big one that I've changed my mind on. When I first started, it was kind of just how much money can I make, to be totally honest. I think when people, you know, it's typically a lie if people are starting an agency or a product-based business or a SaaS company and they're saying it's not for the money. I'm like, well, it's got to be a little bit for the money, which is totally okay. But I was definitely swayed in, totally the money direction, and it wasn't that enjoyable for a period of time. So making sure that if I'm doing this, that I'm actually enjoying the ride, and it's not something that I'm gonna wake up in 10 years and maybe I do have all this money, but I'm like, what just happened? Like, do I have my health? Do I have my relationships? And have I just kind of burned those 10 years grinding away and not really, looking up and fully experiencing the moment as they progress?
You seem to be really good at really adapting and rethinking, your decision making, whether that's with, entrepreneurship, or whether that's with business, or whether that's with life. So my next question I'm curious to ask about is, what are examples of maybe mental models, that you've used, with your thinking process to make better decisions in your life, whether that's around being an entrepreneur or business leader or even, investing?
The one I think about a lot and have been lately is I forget whose mental model it is, but it's like an investor versus borrower mindset. So an investor is a long-term thinker, willing to delay gratification, makes an investment that may sacrifice short-term for larger, more meaningful reward in the long term. And then a borrower is someone with short-term thinker, so is unwilling to delay any gratification, and they're kind of, I guess, very short term in the sense of like day to day, week to week, and trying to maximize that current moment, which is good to a certain extent, but it can lead to losses down the line. And it's financially the same thing, right? It's like the person who racks up credit card debt for that great vacation, but then they're paying for that decision for potentially years down the line. And I think it's just making sure that I'm not making decisions now that I'm going to be paying for multiple years from now. I'm making decisions now that will pay me dividends down the line, and making sure that, I'm obviously balancing the enjoyment in the present moment without sacrificing my long-term future. And that's one that, I adopt personally and business related. And it's something that I just have written down in my notebook every single day. It's like being an investor. And that's helped me a lot in kind of projecting out, but then also making sure that these decisions will compound.
Well, and I think that's really smart of you, right? Because if we don't think about the word sustainability, then we're gonna burn out, right? Which happened to you at one point.
Yeah.
And so that applies to everything in our life, not just your business, not just, physical activity, which, you used as an example before. It really does apply to our everyday lifestyle, right? So a question that I want to shift to next is, when you think about your own business or other businesses that you've worked with, what do you think it takes, to bring a business from good to great?
A couple of things. So I think an underrated skill is, and in everything, is the willingness and ability to sell. I think people can have great services, great products, but if you're not winning those customers, winning those clients, getting your product in the right hands, it just won't succeed. So you can have a good company, but once that person learns how to sell, that can become a great company. And I think that's, yeah, very key, especially in the early stages. And a lot of times people don't like to sell because it's seen as kind of sleazy, but I totally disagree. I think that ability is like unbelievable and something that everyone should lean into, even if you don't own a business. The ability to sell yourself in a large corporation will pay so many dividends down the line, more so than any technical ability, in my opinion. Then number two, I'd say, is just leadership. And being able to be a calm leader and withstand the pressures and the daily grind, and being able to effectively communicate your strategy to your team. This is something that I work on all the time, and it's something that I struggle with all the time too, because you can be reactive and it's extremely stressful. So you need to be able to kind of take those pressures and take those hits as they come, but then you can't turn around and just relay that to the team. You need to make sure that you're doing it in a calm demeanor, and you're not letting them kind of you can't wear your heart on your sleeve too much, in a sense. You need to make sure there's some buffer there with the team. And I would also say that that leadership point of view is, if no one knows where you're going, then the business won't go anywhere. And I've seen some great products, some people that have the ability to sell, but they can't communicate their vision or their path forward to their team. So no one knows what's going on. And so that's a big thing that we've worked on, is writing it down. I think that's, undervalued in the business world, is just the ability to write. So we do a lot of memos internally. I wrote a 2023 wrap up of like where we started, where we've been, where we're going in 2024, trying to do like a monthly newsletter internally. And, we only have a team of 12, and just being like, okay, these were the wins, these were the losses, this is where we want to improve, this is how we're going to do it, and this is how it ties back to our long-term vision. And so it's just that constant reminder of like, this is where we're going. And then everyone feels tied to it, and everyone feels like they have, a piece of that pie moving forward, and the right incentive structure to get there.
I could tell that you're someone that strives like to be your best, not only as an entrepreneur, not only in business, not only as like a leader. What is one book that you think holds great value right now to you?
Who? Okay, I'm gonna say a couple, I think. The most recent one I read that was unbelievable was The Splendid and the Vile, and it's a book about Winston Churchill during the Blitzkrieg in London in the 1939 to 1941, when Germany was bombarding them constantly, night in and night out, and his demeanor and his leadership there, unbelievable. It's an unbelievable book. It's got great stories, but it's just probably the best non-business business book I've ever read, in terms of how to lead in uncertainty and lead when people are scared. I'd say that's probably number one on my list right now. Number two is both of Morgan Housel's books. I think these don't necessarily get branded as business books, but his book, Psychology of Money and Same as Ever, are two books that have changed a lot of how I operate, both personally and from a business perspective. Psychology of Money, it's personal finance, but I use it more for my business than anything. And that's where I get a lot of the thinking of like having room for error and making sure that, there's a safety net there. That's where a lot of that kind of mental models come from, is from him. And then Same as Ever, his newest book out, we're hearing a ton right now of like AI is going to rip away jobs. People basically won't have any attachment to the physical world. But what his book argues, and like great timing on his behalf, is that a lot of things just never change. And the way people respond to fear, greed, and uncertainty always stays the same. And at the end of the day, the world is run on emotion, because it's run by people, and will always kind of have the same responses to certain events. And I've used, again, a lot of that kind of thinking and just learning from history in both of my personal life and business. So I'd say those three right now are at the top of my list. I don't know if I could rank them, but they've been unbelievable kind of guiding lights.
Matt, a question that I ask, all my guests on my show is, what is your definition of greatness?
Yeah, great question. I'd say doing what you want. So many people live in the shoulds, and I do this, sometimes as well. It's like, we should go to this party. No, we should do X, Y, Z because, they came to our, or like they came to our thing, so we should go to their thing, whatever it may be, if it's social events, or no, I should get my CPA, or I should go to law school, I should become a doctor. But my definition of greatness is like, well, do you want to? Are you doing what you want or doing what you should do? And there's a big difference there. And when you do what you want, that's when you actually have true independence. So that's kind of the catalyst to then my definition of greatness would be like spending quality time with my fiance and my nephews and my family, really close with all of them. And that's what truly matters. But the only way I get there is doing what I want and not doing what I should. And making that shift has been challenging. I still find myself going down that kind of, I'll call it a trap almost of the shoulds, but coming out the other side is, it's unbelievable. Like the kind of the freedom and the independence it provides, and also the confidence of being able to say no and being able to kind of live the life on your terms. I mean, even, you know, Ben, right now, what you're doing, I'd say you've gone down a certain path where it's like you have probably gone against what a lot of people would say is like the default path and doing your own thing. And that's because you want to. There's no should there, right? Like I think you're on episode 135, 140. It's like, that's because you want to do it, which is like an unbelievable path forward. So I'd say that's probably my long-winded answer to living my own version of greatness.
Well, I think that's a beautiful definition. I think that says a lot about you, in terms of the way that you show up. And I appreciate those kind words too. Now that you have a good feel of my podcast, and what it's all about, who is a future guest, someone that you know personally that you love to see on the show?
Yeah, I would actually say maybe biased, but one of my clients, Elan Cumberbridge, he's the owner of Guard Athletics. They're a boutique fitness studio in Vancouver, and he opened uh, this studio in June 2020, I think. So like right in the middle of the pandemic, and he's grown it to an unbelievable point. They're expanding. He's got a great team. Probably one of the hardest workers I know, and someone who's just continually, talk about compounding, just like trudged forward and sat in that mud, and now kind of coming out the other side of like has a great team in place. He's definitely at that like level 5 leadership, as Jim Collins says in that book, Good to Great, of like he's elevated himself, he's upskilled himself unbelievably, uh, and he's a great guy. Like, yeah, you'll love him. He's got that sports background too, and he's someone that I lean on quite a bit in my own life, even though he's our client, to kind of be that guiding light for me as well.
That's awesome, Matt. And it sounds like too, he is, not just a client, but a mentor as well of yours.
For sure. Yeah. No, we're really close, and I think he'd be a great guy to have on your podcast. So.
Well, I appreciate that name. And, I'm up for the challenge. Matt, before we kind of sign off today, first off, I want, my listeners to know where they could go, to find your work. And second thing, is there anything else that you want to add to this conversation before we sign off?
Yeah, I'd say the easiest place is LinkedIn. That's probably where I'm most active, and check messages the most, I'd say. Uh, and then last thing I'd say before signing off is the starting a business or going down that entrepreneurship journey doesn't have to be complicated. I think a lot of times people think they need to have the big business plan in place. They need to have the fancy website that costs $20,000. They need to have the business cards. But the reality is that you don't need any of that. All you need to see is, does someone want to buy whatever you're selling, whether it be a service or product, and then start. And you're focused on two numbers really. And it's just the cost to fulfill that service or product and what you're selling it for, and making sure there's a margin there. And that's really it. I think a lot of times it gets, similar to the world of finance, people try and overcomplicate it to sound smart. But the reality is it can be simple. It's not easy, but it can be simple. And a great way to get your feet wet is by offering a service that you already have a skill in. And that's kind of what I did. And then compounded it from there to start building out a team.
Well, I think those are some great last words. And Matt, again, I appreciate your time for today.
Yeah, thanks, Ben. That was fun. Much appreciated.